we are doing the first time home buying seminar today, and it is the first session. Today is all about getting pre-approved. So let's go ahead and do introductions first. I am Ashley. I am the admin on the Harmeyer team, and I keep the whole team organized throughout the transaction. So let's jump to Kyle.
Yep, my name's Kyle Turnus. I'm with the Harmeyer team and Remax Revolution as well. And I am our main buyer's agent for the team. So I'm the one that kind of works with all of our buyers to find you the home that you want, get you in to see those homes, and really work you through that whole process. One of our main lenders that we like to use is Kendall Roberts with Atlanta Mortgage. I'll let him introduce a little bit about himself as well.
So my name is Kendall Roberts with Atlanta Mortgage, and you may not have heard of Atlanta Mortgage. We've been in the Des Moines market for about 2 years. I have over 30 years financial service experience. I'm also a CPA, so for those hard to navigate financial statements, I can weed through them pretty quickly. But most importantly, looking at the different loan programs that we have, whether it's FHA, VA, or conventional, we can get you approved so that when you go to find your home, you can concentrate on buying a home and not so much on getting the loan. So with that, I will get her going.
All right, that's awesome. So I'm just going to pull up our little slides so you guys can see what we're talking about here. And really what we want to go through with Kendall and I, and definitely with Ashley, is kind of our first time home buyers and going through a little bit of the information that we often hear, some assumptions that we hear from our buyers as we go through the process, and hopefully put your guys' minds at ease as we get into helping you purchase your first home. One of the first things that we always suggest doing, and definitely working with a great lender like with Kendall, is getting pre-approved. Getting pre-approved really helps you understand how much of a home you can afford. And it also helps with when you try to get into a home that sellers have a little bit of confidence that you're able to afford the house as well. Especially in today's environment, sellers are a little bit more reluctant to allow just people into their homes. So if you feel like you really want to get into a home, having that letter from a lender saying, yes, we're able to afford the house, is going to have them more likely, more comfortable allowing you into their home. Kendall, what are some of the things that you kind of see as first-time home buyers as they come in to get working on pre-approval?
I think some of the things to put a lot of first-time home buyers at ease is that it doesn't have to be a monumental experience in getting the documents ready. Most likely, it's going to be 2 years tax returns and all the schedules and the W-2s that go with them, the current 2 months bank statements. So if you're looking at a house in June, I don't care about your November and December bank statements. We would want your most recent. And from there, and just to talk about that real quickly, bank statements, it isn't to find out how many times you go to Quick Trip or how many times you're buying the hamburgers at Bebop's, but it's to coincide with your financial picture. So if you have a student loan payment, we would expect to see that student loan payment coming out of your checking account. Conversely, if you have a loan payment to Uncle Joe that you didn't disclose, your bank account's going to show those kind of things. So one advantage of getting pre-approved versus just waiting until you find the house and then going back is to get rid of some of those unknowns, as you may have a $3,000 deposit in your bank account that was, whatever reason it is, we can get some of those things out of the way and verified so that when you do find your house, and I totally reiterate this multiple times, that when you do find your house, you're excited about moving, you're excited about your new home, and you don't have to get stressed out about getting the loan done, and that we get a lot of those things covered during the pre-approval process.
Yeah, and like I always like to tell people, this is kind of a promise from the bank saying, yes, we're really confident that you can purchase a house for this type of amount. So kind of as you mentioned, is you have that confidence going into, hey, I found a house I really like. Kendall says, hey, we feel really comfortable with you at this price range, that you don't have to worry about anything additional. You can really concentrate on getting into that house and working on the things that you need to do in order to get into that house.
Yep.
So one of the questions that we always get, Kendall, and maybe you can kind of shed some light on this as well, is do I really need a perfect credit score? Or what type of credit score do I need in order to get into a preferable loan that you guys deal with.
Yep. And I think in today's environment, you see it on TV at least once a night on whether it's Credit Karma or Get Your Free Credit Score, those kind of things. So just to make sure people understand, there are multiple types of credit scoring going on. And when lenders are looking at your credit score, it's considered a mortgage credit score based on an anticipation of where they think or where the credit scoring is going to put you in repaying your loan. So when you look at, well, what's a great credit score? Obviously, an 800 credit score is awesome. To say an 800 is that much better than a 740, I probably wouldn't say that. A 740 is also a great credit score. Now, if you're in the 580 and below, or even 620 and below, those really aren't good credit scores. And it doesn't mean that your credit is bad per se. I've seen a lot of younger people that really don't have much credit, so they're not getting the points for having good credit. They're not getting negative points for having bad credit. So on average, so when you look at this meter, that poor credit score doesn't say that you're a deadbeat, you don't pay your bills. It just could be that you've had some credit impairment in the past, whether it's you were late on a car loan a couple times in the last 24 months, or you've been late with some credit card payments, or worst case scenario, you had to file bankruptcy. I've seen some people that had filed bankruptcy within the last 3 years and their credit score is 720. So some of those things in and of itself doesn't necessarily mean your credit is bad. It takes it all into account. So if you're in the 700 and above range, I would call that good to excellent. Average is going to be between that 680 to 700 range. And then you're getting below 680 down to the 640 range. That is, I would call the gray area, meaning there's a lot of programs out there for out in the industry for down payment assistance and those kind of programs that have minimum credit scores. And typically that's in the 640 range. And in some cases, especially most recently with the coronavirus issues, they've increased those. They've tightened the underwriting standards, and some of them are up to 680 now. But if a person's at 640, 660, and we can see that, well, you're getting dinged because you have a credit limit on a credit card of $2,000 and you owe $1,990. So we help them to show that if you can, one, get your limit increased up to $3,000, now all of a sudden you're at a 60% usage, which is better from a credit scoring perspective. Or maybe you're an authorized user on a credit card that isn't even yours. It's your mom and dad's to help you get credit established, but it's maxed out. So we get that credit card, get your name taken off of it in some cases. Or conversely, if you don't have a lot of credit, you are new but don't have any bad credit, we get you to get onto somebody else's credit card, whether it be your folks or your wife's credit card, as an authorized user. And that can help your credit as well. So there's some little things that we help with in the pre-approval process, especially if you need that help from Iowa Finance Authority for some down payment assistance, and you need that better credit score, realizing that, okay, this isn't going to be a 3 or 4 day process. It could be a month or 2 month process. But that's the good thing about getting pre-approved, in that if you can get your credit score up a little bit higher, one, you can get a better interest rate. You might get the program for the down payment assistance, but you're not overly pushed into thinking, oh, I got to get the house today. And then you come and talk to us about the lending and all your hopes get squashed, and then you get a bad taste for buying a house. So again, it gets back to getting the pre-approval, getting the credit score to see where we can help you. And then from there, get into the next phase. And that's meeting with Kyle and figuring out where you're going to get the house.
Yeah, and that's some great points there, Kendall. You know, kind of as we talked about everybody to get back into, do you need a perfect credit score? Well, no. I think Kendall kind of just proved that. And even if your credit score is a little bit below where we'd like to see it, there's a lot of things that a lender can work with you and kind of give you some advice on as far as how to get that credit score up within the next month or two, to where you can get into a program or use IFA or have some kind of down payment assistance. You know, there's different ways around it. And I think we just like to make sure people know that you don't have to have that perfect credit score. That's something that we can always work on. And it does take time to find a house as well. So by the time that we find the house that you want, there's a good chance that we're able to kind of work on your credit score and get that to where we need it to be. Would you agree with that?
I would agree with that, yes. And if your credit is really damaged for whatever reasons, you had maybe a string of bad luck, you got some old medical collections, we partner with some other credit agencies to help people improve their credit. Now, a lot of those people, obviously, they don't work for free. But if you can get your credit score improved from, say, a 640 up to 700, and your interest rate may go from 5.5 down to a 375 or 350 market rate, that will save you thousands of dollars in interest. So to spend $200 to $300 to save thousands over a 3 to 4 year period is definitely worth it. So we're working with people because at the end of the day, we want to help people get into the home of their dreams and be able to buy something that they can afford, they can keep paying on, but that they can call home.
Right. And that's why we always suggest, no matter where you are and thinking about buying a house, starting with that pre-approval, understanding where your purchasing power is and what your credit is for and how to improve. That's always the best place to start before you even really start looking at houses, because you really need to understand, what can I afford, what can I do, and what can I comfortably live with once we get into that purchasing stage. So,
exactly.
Another thing that we've heard a lot, definitely in today's times, is now a good time to buy. And we always say, yes, it's always a good time to buy it if it's on your schedule. You know, we want you to feel comfortable with the purchasing process and everything going on. And at the Harmeyer team, what we do is we try to help ease a lot of the burden of looking at houses, whether we go and do a virtual tour, which we offer a live 360 tour of the houses and the homes that we do list for people. Those homes automatically have a 360 tour that we're giving people, so they don't have to go into the home. You know, people are always concerned with, as a seller, how do I allow buyers in? Well, kind of as we talked about before, having that pre-approval letter really gives that seller some confidence, saying, hey, this is an active buyer. We know they can afford our house. They're more likely to allow you to go into their house and view it to see if that's something that you would like. So even with everything going on in today's environment, we still have a lot of active sellers. We still have a lot of active buyers. We still have people wanting to move. There's still life events happening to where people have to move homes. And I think we really just want to be there for people to kind of understand we're there to support you in which way we can. Kendall, I don't know what you guys have done on your end. If you want to talk a little bit about your process in your office and how you guys have kind of gotten around some of that.
Yeah. So in the whole virtual environment, I think the biggest thing is to reassure people that we can meet electronically. Obviously, we're doing it today through Zoom, FaceTime. We get documents to you to be signed electronically. So as long as people have access to an iPad, an iPhone, Samsung phone, whatever, it doesn't matter. As long as they have access to some electronic means and have an email address, we can do probably 99.9% of the documents can be signed electronically. And in some cases, even when we get to closing, they've got controlled closing, so you're not sitting around a table with 3 people milling by. And granted, you're sitting in your car out in front of in the parking lot, but at the end of the day, you know, it's safer that way. And then we do, again, the meetings virtually, and I try to make it that I can be available if somebody wants to meet at 6 o'clock, 8 o'clock at night virtually to ask questions because they can't do it during the day because they can't FaceTime or Zoom during the day with their work or whatever. You know, we can do those things. And more importantly, getting back to, you know, is this a good time to buy? Obviously, you want to narrow your choices down so that you're not looking at 15 houses because it's not a 10-minute process anymore to go look at houses. So you want to make sure if this is the house you want to look at, is there something that maybe you don't not quite anxious for or really enthused about? But that's where having that meeting with Kyle, meeting with the Harmeyer team to know what house are you really looking for and narrow it down so that you aren't wasting a lot of your time and you're within the budget that we've talked about from a pre-approval process. So as a finance guy, degree in economics, when they say is now a good time to buy, I can give you all kinds of reasons why now's a perfect time. Now, when rates go up, typically we see prices go down, So that's always a good time to buy. So when it comes time to getting into real estate, and I'm obviously segueing into a future slide, there's somebody always making a payment on a house that they're buying. It's just a matter of if it's going to be you in your own home, or are you buying somebody else's home through rent. So I'll just leave it with that.
Yeah, no, those are some great points. And kind of to piggyback off of what Kendall said is for your purchasing of the home, we do a lot of virtual as well. We'll do a Zoom chat as well. Well, we'll sit down and kind of go through what type of home you're looking for, what's your budget, what area do you want to be, how important are schools and location and those types of things. And then once we kind of get through a lot of that, we'll also then sit down and look at houses virtually too. So we'll get an idea of, okay, what type of home do you like? Where, what are the features that you really need to have in your home? And we can do all that virtually. So we don't have to always get together. And then any of the paperwork that we're signing or having you guys sign it to actually purchase the house is going to be done electronically as well. So we kind of relieve a lot of that stress as far as having to worry about getting into people's houses, whether you have to go see Kendall or myself in person and physically sign stuff. A lot of that has been eased with the virtual environment that we've been able to set up now and do a lot of things electronically. Yep. So if you're worried about those types of things, we still think it's a good time to buy based off what Kendall just said as well. And we're going to get into it here right now, which is, rates are really low right now and they continue to be low, historically low. So one of the things, and it's one of Kendall's favorite things to talk about, what do I do? Do I rent or do I buy?
And with that said, it's unlock the door to your independence. And in one sense, everybody is buying, and I alluded to it earlier. You're making somebody's house payment, and it's just a matter of, do you want to make your own house payment or do you want to make somebody else's house payment? Because when you're paying rent every month, you're making somebody's house payment for them. And when I loan money to somebody that is buying rental property, they know they're going after the person that wants to rent, that doesn't want to take the chance and the risk of owning a home. But in a sense, that person that's renting is making their equity payments for the owner. So in one sense, do you want to be an owner of your home or do you want to be a loaner, meaning you're loaning your bank account to somebody else to own that home? So I think the next slide, when we start talking about rent payments versus house payments, how much can a person afford? And this slide really points it out. I went out to make this slide. I went out and priced some homes and some apartments and that were currently being rented. So the first line is a 2-bedroom, 1.5 bath apartment. It was 914 square foot. The rent payment on it, not counting utilities, not counting your renter's insurance, anything like that, was $900. So yeah, a person right out of college, maybe that's what they're doing, they're sharing it. But that same almost square footage, a little bit bigger home, you could buy for $1,017 a month payment. And with that, you get your independence. You don't have somebody knocking on the floor above you or the floor below you. You have your independence. If you want to go and turn around and put a hole in a wall and put in a wall safe, or you want to remodel, or you want to do anything, you don't have to ask. And then going on to the right, the purchase price, the yearly taxes, monthly insurance, and the down payment are all posted there. And I figured that payment with a 4% rate. Now, obviously, in today's environment, that 4% rate would be on the high side. There's rates much lower than that. But that first line is your typical apartment, 2-bedroom apartment that a lot of people are renting. You can find much bigger places. There's townhomes out in West Des Moines, over in Altoona, 3-bedroom, 2-bath townhomes that you get a couple roommates, not bad. It's 1,100 square feet. Rent payment is anywhere from $1,200 to $1,600. You can find that same square footage home, 3-bedroom, for $1,262. That's almost a $200,000 purchase price. The home that I found was $198,813. I'm not sure what realtor come up with that price, but for a reason. And the yearly taxes and the monthly insurance and the down payment, is all there as well. So, how much can a person afford? And so we got 2 rent payments there of $900 and one for $1,200. If your rent payment was $800 or if your rent payment was $1,400, we got some different numbers there. You can look at what an $800 a month can get you, or what a $1,300, $1,400 a month can get you with taxes, insurance. So There's a lot of buying opportunity, and it all gets back to, do you want to make your payment for your house, or do you want to make the payment for somebody else's house that you're living in? So, it's just the decision. And obviously, we're homeowners, and we like that independence and the freedom that we have to unlock the independence to our own home. So with that, Kyle, you want to add anything to that?
Yeah, one of the other things is, they might be paying someone else's mortgage, but think about the equity that you're actually going to get out of the house as well. So that the cost of renting is kind of a debt payment to you, to where if you're paying for a house that you own, you can get that money back later on down the road as well. Like, it's not just going away. It's actually something that you're earning and putting equity into yourself as well, versus just handing that equity over to somebody else via renting.
Yep. And if I can add to that, from an investment perspective, I think the younger generation is very mobile. They like the ability to move from one place to another. And my son's in that 25 to 27 year range. And they're like, well, I'm not sure I'm going to like this house. And I had one of his friends buy a house 2 years ago thinking, well, I'm not going to stay in it more than 3 years. And so I showed him that not only are you making equity payments, and this isn't true in all economic terms, but the payback period was about 3 years. If he moved after 3 years, he would be money ahead because of, one, the equity from his payments, and two, the appreciation of the value of the house. The Des Moines market, Golden Circle area has great appreciation. Even in the downturn in 2008, it wasn't that big of a drop, and it came back strong. And we're constantly seeing homes that I've seen in the last 2 years that sold for 190, 200 are now in the 220, 230 range. So you're getting appreciation on that investment. And the thing is, whether you put 2% down or 10% or 30%, the appreciation happens on the total value of the home, not just the value that you own. So if your equity is only $10,000 and it grows in appreciation value, $10,000, that's 100% return on your money right there alone. That's an investment that I would make every day if I could.
Yeah, and that's a great point. I mean, just thinking about the value that you get out of owning a home. And as you mentioned, just if you're wanting to move around and even fix up little things to improve the home, the appreciation of getting your return of that money and the appreciation of the value of the home, just, it's hard to beat. One of the things that's great as an investment is definitely real estate, and being able to get that return of an investment back on everything that you want.
Yep.
So I want to say thank you to Kendall. We're trying to keep this somewhat short, especially for our first time. Here's Kendall's information. Kendall, I'll let you plug yourself one more time.
Yep. If you want to give me a call, want to discuss anything, or just want to check out my website, it's pretty simple. KendallMTG.com. That's KendallMortgage.com. And, give me a call. I'd love to get you pre-approved, get you set up so that when you talk with Kyle to find out what house you're going to go look at, he knows exactly the budget range that you're looking at. And when we talk budget range, I will tell you the ratios for the maximum qualifying. I will probably try to convince you, you don't want to borrow the max. That's where people get in trouble. But if you're paying $1,200 a month in rent, that's a good place to start for a house payment. So with that said, I'd love to help you and love to work with the Harmeyer team best we can.
Great. Hey, Kendall, I really appreciate you jumping on. I think we've had a lot of good points, and, everyone listening to this and watching it later, those are just some of the highlights of information that we'll be able to sit down and talk with you with. We're trying to just give you some tidbits and give you some information so you can really get the process of thinking about, okay, what are some of the things I need to know for purchasing a home? But really what we want is you to contact us so we can really have a more detailed conversation with you and make it more personalized for what you're looking for in a home and a mortgage and everything like that. Ashley, I'm going to kick it back to you kind of to wrap everything up.
Perfect. So yeah, thanks everyone for joining in today. Thanks, Kendall, for being on the call with us. Just as a reminder, we are the Harmeyer team. We can assist you with the buying or the selling side of a real estate transaction. And we are with Remax Revolution, based out of Pleasant Hill, but we can help with a lot of different areas in the Des Moines area. So We are very easy to find. We're very active on Facebook, Instagram, and YouTube. So you can find us on all of those. We have a website. It is www.weselldesmoineshomes.com. So you can reach out to us there. You can reach out to Kyle, again, the buying agent, at 515-978-8914. That's going to be a good number to find him. And then you can email us at agents@harmeyerteam.com.
Yep. Thank you, Ashley. And we really look forward to working with you guys. Get in contact with us soon. Call Kendall, get in touch with him soon, see what you can get pre-approved for, and we'll kind of go from there. I'm going to stop sharing that. And, that's going to be the end of our presentation. So, Kendall, again, thank you for really jumping on and sharing your thoughts on everything, and really hope we can work together soon on everything.
Sounds good. Look forward to it.
All right. Thanks, guys.